मिश्रा हमारे सहयोगी सीधे हमारे साथ जुड़े हैं, देखते हैं.
So behind us.
That's for you to assess. I think Dr. Patra can take that question.
As I pointed out, we have moderated the size of the policy rate increase. That is a very fundamental guidance that we are giving to the market.
Right.
That the rates
Switch on the mic. Switch on the mic.
Sorry.
Any other mic on? Please switch. Please switch off your mic. Yeah.
If things pan out as we have projected, then the rates of 50 basis points consecutive increases are over. But we cannot take our shoe off the brake because inflation is still averaging 5 to 5.4 next year. So we must guide it to a place where it remains stable at those ranges and then move on to 4. Till then, we must be, on our toes. That's the thing.
Another question on the widening gap of credit growth and deposit growth. That is something which has been a concerning factor for banks. Has there been any communication with banks so far? Is there any direction which RBI has given? If you can update on that.
No, RBI doesn't give any direction to the banks with regard to their interest rates on either side, whether credit or on the deposit side. The credit growth and the deposit growth have to be seen in the proper perspective. The credit growth is on a low base. The deposit growth is on a high base. That is why it appears the divergence between the two, they look to be so divergent. During the whole period of pandemic, or even last year, the credit growth there was hardly any credit growth. It was about 5%, 6% or so, low base. But deposit growth had picked up in the first 2 years of the pandemic. So whatever is now happening based on the deposit side, the growth is, has to be seen in the context of the base effect. Now banks do their asset liability management, and depending on their funds requirement, depending on their own asset liability management, the ALM, depending on their ALM assessment, they will take necessary action both on the credit side as well as in the deposit side. We keep meeting the bank. I can understand from where your question comes, because I had a recent meeting with the bank executive. That is nothing to do with the interest rates, because that is deregulated. That meeting is to take stock of the overall banking sector, where it stands, what are the challenges, what are the possible risks. It was broadly an assessment of the overall banking sector and what is the outlook. And we need to hear from the banks also what is their assessment. While we keep on making our assessment, but we would always like to hear what is the assessment of the banks. Is there anything you would like to add?